Hello, good afternoon. Welcome to the Daily Rundown video. This is Mike from WIC. Let's talk about the market today. And then after that, we'll discuss some stocks that we're eyeing for adding to our portfolio. So market today continued what we predicted would happen last week, and definitely the Fed's decision on rates yesterday solidified this move in the market. So that is the rotation away from value stocks, away from cyclicals, into growth. So the sentiment right now is that growth will peak soon in the economy, and for that reason cyclical stocks are at the peak of their performance. As a result, the market is rotating away from those cyclical stocks and rotating into secular growth stocks that are able to deliver even when the economy is not performing well. So the market, again, is pricing that we have reached peak growth in the economy. So what does that translate into market actions? If you look at banks, they are certainly cyclicals. They do well when the economy is doing well. Banks are down 3-4% today. Bank of America down 4%. You have Caterpillar down another 3%. It was up in the 240s, and now it's in the low 200s. 40 points. That's a lot. You have UPS, you have FedEx, those cyclical stocks that have performed essentially since November of last year, certainly have peaked and see signs of exhaustion. You also have the materials, Freeport-McMoRan down another 5% today. Interestingly, gold, which is seen as a hedge against inflation, is also down today. So this is, certainly relatively counterintuitive. If you were to think that, with the hot inflation data, market would be worried, but market seems to be shrugging that off right now. So we're not operating on inflation fears. We are actually operating on the fact that the sentiment that the economy has peaked. So certainly for the next couple of days, watch growth stocks, the likes of Microsoft, Apple, Amazon. You have AMD up big today, more than 5%. You have electric vehicles. It was very interesting to watch the action in electric vehicle companies today. You have Tesla up 2%. You have NIO up 5.5%. But the traditional vehicle manufacturers like Ford and GM down about 2% today. And so actually that segues into my next discussion about Ford and GM. Yesterday, GM was out talking about the fact that they will be able to deliver a good quarter this year, raising their guidance. I think they will now forecast 8.5 to 10 or $11 billion of profit pre-tax. Ford also out this morning saying that they would be able to deliver substantially higher earnings compared to what they expected before. I don't think we got the numbers from them. That should be coming out in the next few days. Normally, in normal days or in calmer days, that would be good for the stock and you would see the stock up. However, Ford was stuck in the broad industry sell-off, market sell-off. So that's the reason why Ford initially got up. Pre-market, it was up about 3%, but as soon as the market opened, you see just red candles, and Ford was down. I think the lowest point of the day was down more than 2%. For us, we think that's a buying opportunity. The fact that Ford was down today while other EV companies, especially companies like NIO and XPeng Motors and Li Auto, were up, and also Tesla was up. that means that companies like Ford and GM are not being valued as electric vehicle companies, but you know that they are very competitive as electric vehicle companies. And so this means the EV potentials have not been fully priced in for those GM and Ford stocks yet. And the fact that they have raised their guidance, essentially, but the stock having not reacted means it is a buying opportunity. Eventually, the market will look at Ford and GM differently and will use this as a buying opportunity. So that's Ford and GM. We have a lot of stocks down big today. We have the banks down big. We have the oils down big. Remember, we took some oil off the table yesterday. We took a lot of Bank of America, about a fourth of our position off the table last week. So we were prepared for this sell-off, and we're just waiting for a couple of days. I've discussed many times that we're entering a seasonally weak time for the market. 22 out of 22 past years, this time is the weak time in the market. I think the sell-off, as predicted by legendary Larry Williams, says that the market should top either tomorrow or Monday. And then after that, you have a week of weakness, and then 4th of July, around then is when you should buy. So we're waiting for a couple more days. Tomorrow is quadruple witching, is a time that multiple future contracts, derivatives expire, so that may be a volatile day. Probably don't take too much of what happens tomorrow into consideration. So I would wait for dip buying opportunities next week. For Bank of America, one of our big positions down big today, probably wait until the 38 area. For Citigroup, in the 75, especially if it gets down to low 70s, that would be good. You have Wynn Resorts that you can nimble some right here. You have Boeing, if it gets down to the low 230s, that would be good. Freeport McMoran, if it comes down to the low 30s, we'll definitely buy some. And we'll be looking to probably lighten our position in NEO if it comes above 50. Currently, it's super overweight in our portfolio. So those are our actions. And we believe that you can, if the weakness does occur towards tech stocks next week, I think would be a good opportunity to buy into stocks like Microsoft or PayPal. All right. So that's the kind of the overview for the market next week. Since tomorrow there won't be a lot of activities, we won't do a rundown video. So with that, I will see you next week.